What I've got here on top trades is a price action based reversal from a VPOC. This can be applied anywhere really, it doesn't have to be from a VPOC, but it's better if it's from some kind of technical level. Now, what we got in the DAX is we got this drop, and this is the 1 minute chart showing the acceleration after the inside daybreak fails and moves back down. You get the acceleration as we get back through the bottom of the initial balance, and the market starts to fall. Nice target down at yesterday's VPOC. At the point that we get there as well, Delta is no longer falling, and Delta actually relatively doesn't fall as much as we make a new low, a sign that potentially you've got a low. So that's where then you're going to be looking at a ladder to try and find a way into this trade. The VPOC comes in at 30s. What I've got here is the ladder just after that VPOC was traded through and back up. And what you see here in the volume traded is as we drop down, we move through 30s or 31s and 30s with relatively little volume, 16 and 18 contracts. Then we push down and back up very quick and start to accumulate volume higher up, leaving this sort of low volume, higher volume type profile. And this here is the point that you're looking at to use as support. Effectively, the market trades through the VPOC and back without doing any trade there, or without doing a great deal of trade there. Therefore, showing you that even though there was selling initially, there's no selling on the way back. And so for that reason, you can look to try and buy it. I'll show you what this looks like on a ladder and how you might want to try and execute the trade. I put a bid in at 30s on that VPOC just to illustrate what it would look like if you just had a bid and got filled. And then we'll have a look at where perhaps the better execution of this trade is. The way I always look at any trade is I want to look at the price action. I'll always have an idea of what I want to do. So it's not a case of, oh, it gets to a level, I'm going to see what the price action does. I have an idea of what I want to do. On the back of this move, with Delta starting to rise off the low, the plan is to try and buy the VPOC. But you don't want to just sit there and put a passive bid at the VPOC, market drops, filled, keeps on going, you get stopped out. You want some kind of quality to it. You want some kind of clarification that this is going to work. So if you just put a bid on the VPOC, comes down, trades just above you, straight through, starts to drop. That creates a bit of panic. Here's the volume getting created. And then we jump straight the way back through 31s without trading a great deal. Here you can see 30 and a half and even 29 and a half, very, very low volume. And then the volume starts to pick up just above. That's your price action reversal point. Yes, it coincides with a level. So what you're doing is you're using something that you can see on a ladder to qualify that level, to say to yourself, yes, this has worked. So then, as it comes back down, you're looking to try and buy the level as the market comes back off with a stop below the low. In this instance, you've got a stop of around about 4 or 5 ticks, so quite tight. If that is becoming prohibitively far, then you're looking for a stop back down towards where the volume starts to pick back up. Because if we get back down there, that's showing you that the market is willing to trade down at those levels and willing to accept trade down there. Once you then start to rise back up, this is where that turnover in Delta starts to help you out. This is where we start to progress back up and you then get this grind. Ultimately, on a reversal, and you need to remember this if you're getting in towards the lows of a move, excuse me, if you're getting in towards the lows of a move, on a reversal, to start with, people are still going to try and sell this. Ultimately, you've been paid pretty well if you've sold all the little bounces all the way down this move, so people will start to try and sell. It's only once it starts ticking through those sells that the market then starts to tick up and tick up with a bit of pace. And that's what we get here. You get this drift back up, and it takes about 1, 2, 3, 4, 5, 6, 7 minutes to get yourself back up to 50, the most recent small pivot. Drop back down, and it gives you a second bite of the cherry. The move that follows drops all the way back down to 31s, hits it, and this time, on the second wave down, almost instantly jumps to about 40, and then starts to tick on beyond that, taking out the 50s and actually taking this all the way back up towards 90. So just because even if you miss it the first time, you still get an opportunity to take it the second time. But remember also, with the first time trade, it's often a bit of a scalp type move. This is a situation where people have been short, looking for a place to take profit. VPOC offers them that. Those who don't take it there then start getting their trailing stops hit, which is also why you then start to tick up with a little bit more pace. So that's your sort of price action based reversal off the VPOC in this case, but it's all about this little pattern and how it develops that low volume, high volume, low volume type situation. One to watch out for the future, and this is exactly what I mean by using the price action to tell you whether a level's worked, rather than use price action to say, oh well, I'll see what it does when it gets there. You still need a plan for when it gets there of what you're looking for. When you see what you're looking for, then you can execute a trade.